Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March the 14th, Tuesday, CPI day, and oh boy, we met the expectations. Core inflation rate year over year, 5.5, expected 5.5. The previous one was a little bit higher, 5.6. Year over year, the general inflation is increasing 6% as expected, coming from a 6.4 increase. So reducing the increase, and month over month inflation rate came as expected, 0.4%, but the core inflation rate month over month increased from 0.4 expected to 0.5 expected. Overall, it was a decent CPI report, and if we check the details, we can see that food is decreasing the raise from 0.5 to 0.4. This is energy overall from 2 to minus 0.6. So big hit. And in energy, fuel oil minus 7.9%. And the core part is the 0.4 to 0.5 increase. And this is due to used cars, trucks, coming from minus 1.9 to minus 2.8. But look at this, services, less energy services is coming higher in, I think, almost everything. Transportation 0.9 to 9 to 1.1, and shelter 0.7 to 0.8. If we check the CNBC useful graph, as you can see, food is still up there with eggs. I mean, we all know that eggs, butter, bread, cakes, sugar, it's super high on prices. Then we have motor and everything that is fueled with energy. Food at home, 10% still food, and on the lower side, used cars and trucks and televisions going in the negative. So overall, decent. I think it's quite decent. It's not good in my opinion, but it's decent. We are still seeing some signs of core inflation being with us. So that's sticky inflation. And well, let's see how markets reacted. You can see this is when CPI report came out. Look at this bottoming tail. Huge bought up, huge buying pressure, and then into the open, accumulating pressure. And since the open, we open here, we are right now 0.81. It's not a big move, but we have to take into account that if we check the 5-minute chart, we were already quite long on the day. Since open in the overnight until the open in regular trading hours, we were 1% already. So 1 plus 0.81, I mean, this is 2% on the Nasdaq today. So if you think that Nasdaq is going to continue higher and higher and higher, be careful, because right now we have a very bad ratio in terms of going long. This is the 30-minute chart. Look at this bottoming tail that I always pay attention to in the 30-minute chart. This shows strong buying pressure, and we were basically in this range for a lot of time. These two X's at the down was on Friday when people bought up the crisis, and on Monday when people bought up the crisis again. So what did we do today? Well, we broke out here and we are entering a new area of balance that I think is going to be really tough. This is coming from Thursday when we sold off of 12,500, and we are here Look at this. We are here. This is a 30-minute chart and we are super long. 1, 2, 3, 4, 5, 6 green candles in a row. So I think markets need to chill a little bit and let's see if we can hold 12,220, because that would mean that we are now establishing this kind of area as support. Previous resistance would be support if we pull back and we hold these levels. This is super important to see, to focus on the big picture. Apple, if we check the 1-minute chart, Apple is holding really good. Higher highs, higher lows. Big trend date for Apple, 1.67. Microsoft also, this is an ascending triangle that is trying to break out. Be careful with these kind of things because everything can happen at these levels. This is a big resistance area for Microsoft. Microsoft is a big market cap and we are already quite in the green. So expect some kind of pullback. I'm not talking about selling off. I'm talking about a correction to the mean. The moving average is down here. So be careful because we could end up going to VWAP or some decent volume weighted average price that may balance the day. We are super green. Tesla 3.34. For sure, is not what we usually see around Tesla volatility, but we are in this kind of area stacked there without any clear progression. We are chopping around in here, but if we check Google 3%, Nvidia 4%, everything super bullish, and Meta, look at this unbelievable move. Now we are consolidating up here because Meta shared with us this news a few minutes ago. It will lay off 10,000 more workers after the initial cuts in November last year. So Mark Zuckerberg has pitched 2023 as the company's year of efficiency, and that means bad for employees. This is bad for employees, but good for stakeholders and the stock market. Remember, the stock market is not the economy, but Meta being efficient is what investors want. And that's why usually we see these kind of moves from Meta. Unbelievable move, quite strong today after this gap up in February. Look at this. We are still pushing higher and higher. We have still way off highs, but look at this volatility. For sure, big day for Meta. Let's go back to the Nasdaq and see if we are correcting a little bit or not. We are slowly showing signs of not bearishness, but we are seeing resistance. I mean, this was clearly a level that held, and there's a lot of time yet, a lot of trading hours yet on the day. So we'll have to see how we end up today. We are super green after yesterday's big announcement from the Federal Reserve saying that they will support, and also Joe Biden saying that customers are safe, customers' money. Today, we woke up with Credit Suisse sinking further 5% because they found material weaknesses. So this Credit Suisse adds up to the fear that a lot of people is having with the bank sector, the financial sector. If we check the XLF, the sector fund for financials, we sold off, we bounced it, but we are still showing signs of a little bit of uncertainty. But this is the sector fund. If we check several banks, regional bank ETF. This is the ETF that includes every regional bank as Silicon Valley Bank and others that basically got demolished. As you can see, yesterday we were holding super volatile, but today we gapped up. And if we check bank by bank, First Republic Bank, look at this move. Let's check the 2-hour. We sold off, we gapped down, and we are now recovering. This is basically the base of the momentum, of the bullish momentum that we are getting in every market. This is due to the financial sector bouncing. Also, Western Alliance Bar Corporation also pushing, bouncing. Yesterday it did. Yesterday, let me check. Yesterday in here, it was halted down several times. So a lot of volatility in this bank. And also Key Corp also bouncing. You can see big bounce. Look at these bottoming tails. So overall, the regional banks, this is the ETF, is showing signs of a recovery, of a bounce, big bounce on the financial sector fund, and this is fueling the bullish sentiment or the decent sentiment coming from the CPI. So this is the kind of thing that is pushing the markets up, but there's still a lot of uncertainty regarding that. Are we good or are we bad remaining inflation and next expectations on the Federal Reserve interest rates? So let's check the FedWatch tool, because that would provide a little bit more details regarding the expectations. And as you can see, we are pricing in 25 basis points from 450, 475 to 475.5 terminal rate with 86% with probability. And I think we are pricing in one small interest rate hike, 25, and another 25 on May. And 525, it's more or less what bonds market are pricing in for September. And also, look at this. I mentioned this kind of chart yesterday in my recap video. Oh my God, this was the previous, this is the September interest rates futures. We were pricing in 5.68 until the financial sector, the banks got demolished, the meltdown, and now we are bouncing from, look at this, because this is something to look, 20% bounce from 4% interest rates to 4.7. Unbelievable volatility. So I think markets are not yet decided in what kind of rates are we going to get in the midterm, and that's why we are getting these big bounces, all fueled by the uncertainty on the banking sector. But December is also looking 4.5. So this 5% that we are seeing on the probabilities on May is not already priced in bonds market, in yields. So bonds market are pricing in only a 5.80, 5.75, not 5 to 5.25% probability of interest rates. So be careful with this difference, because we are still under turmoil and we are really scared of everything. Markets are quite sensitive right now and anything can happen. What is true is that yesterday's it was super bearish, and today we bounced off that, but we need more time to really digest the situation of the overall economy. And on top of that, we had the CPI. So as you can see, really difficult and tricky markets to trade. Finally, let's talk about dollar. You have to really follow dollar. Don't forget about it, because we are we need to follow the cash. And right now, cash is flowing out of Forex, of the banks, and moving maybe in the stock market. But what is sure is that the previous resistance might be support today after this sell-off due to the bank's meltdown. US 2-year yield, look at this, is 10% in the green today, also bouncing at 4.34%. And the 10-year, the most important yield on US, the US 10-year yield at 3.60 already. So be careful, because we were in a really dangerous spot, but everything is back to normal, more or less. But we are pushing higher, so something is quite suspicious. Let's call it, I don't know, something is really smelling like sketchy. I don't know how to say it, but something is not right. Either we are too red or we are super green as right now. Because I think today CPI was decent, but not this bullish. And we are more than 2% on the green on the Nasdaq. So finally, inverted yield curve. Look at this volatility. This is the 10-year minus the 2-year yield. We bounce off that, and we are back off. So markets are not yet decided on what to do. Are we going up? Are we going down? Are we good? Are we bad? Are Fed going to raise interest rates again? Tricky, difficult markets. So the only thing that you can assure is that everything is green, but neither everything is bad nor everything is good. We have to find some equilibrium, and I think the equilibrium is going to happen throughout the day as people start taking profits or saying maybe we are too long. We are quite in the green, and when everyone is bullish, be careful, because something is sketchy. And I think that's all from my side. As always, thank you for your time. If you found this video useful, please support the channel, click the like button, and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market forecast, market updates, and market recaps. I appreciate your time as always, but remember that the trading day is not over yet. We are at 11. There's still plenty of hours to correct and to finish the day even in the red. Anything can happen in these markets. Uncertainty, fear of recessions, equilibrium, everything and anything will happen at some point. So be careful, because discipline and risk management are key for your success and are your best friends to make profits under these circumstances. Stay safe, everyone, and see you tomorrow.